If you're just starting to trade on the stock exchange, it will be useful for you to learn about such a strategy as averaging. If you already know about it, watch the video until the end. I will tell you how to use it more effectively, including with the help of my trading robot. Let me show you it on paper now. So, let's imagine that the price of a certain stock at the moment is $10. This is a sample chart, and we bought one stock at $10. Then the price of the stock went down, and at this point, it's only $8. What can we do? We can sell this stock and take a loss of $2, but we can do something else. We can buy another share, but at a cheaper price of only $8. So we'd have 2 shares. Let's do the math. $10 plus $8 equals $18. And divided by 2 shares equals $9. So the average price of our 2 shares is only $9. So it's the same as if we bought a share of at $9 or 2 shares at $9. In that case, the average price of the stock is said to be 9. The operation we've done is called averaging. So we've averaged the price of our investment. Now, if the price goes in our direction, all we need is for it to go to $9, and thus we will be at 0. That is, on the second purchase we will be in plus by $1, and on the first purchase we will be in the minus by $1. The total will be equal to 0. The advantage of this method of averaging is that we do not need to wait until the price reaches $10. It is enough for it to reach $9, or just 50% of its movement. After that, we can decide to exit the 2 purchases. This way, we can sell both of our stocks and our financial result will be 0. I just showed you an example of how to exit a trade at 0, that is, without a loss. That is, the averaging strategy is used in this case in order to reduce risks. Now, let's see how it can be done on the real market, for example, on the eurodollar. So, I opened a chart of the eurodollar D1, i.e. daily candlesticks. And now, let's try to visualize a normal situation. Let's say we see an uptrend and I decided to buy 10,000 euros. Now, at this level, I decided to buy 10,000 euros. If you don't have 10,000 euros, it's okay. The broker can always offer you leverage. There's a separate issue about that, by the way. Be sure to take a look and you can buy 10,000 euros even if you have only $100 on your account. Let's put a square where I bought. So I bought, but the price went against me. The price went down and went through, let's say, 2,000 pips. Let's measure it. At this level, it's about 2,000 pips. 2,000 pips of drawdown against my 10,000 euro position means a $200 drawdown. Let's say we are now at this point. I'm going to put a square on it. I have 2 options. Either I close the position, or I can use the averaging method. Let me zoom in a little bit more. Let's take a look at this on H4. Now this is where I bought, and this is where I decided to average out. What do you mean averaging? I decided to buy another 10,000 euros. So I have a total of 20,000 euros. The most interesting thing is that now I do not need to wait for the price to return to this level to get out of the position to 0, as I drew on the paper. That is, to the initial level where I bought the first position for 10,000 euros. It is enough for me that the price has passed at least half of the movement. That is to about here. So the price went up, and as soon as it reached this average value, my profit on the second position was $100, or 1,000 pips the price went through. And my drawdown on the first position is also $100. So on the first position, I have minus 100, on the second position, plus 100. In total, I'm at 0. That is, if I want to get to 0 from these positions now, I just close both trades at this level, and I have lost nothing. If I want to continue moving along with the trend, I can wait until the price rises to the initial level. And at that moment, I will be at 0 on the first deal, and on the second deal, I will be in plus $200. And further, if the price will pass the same distance of 2,000 points, my profit will be not $200, as if I had only one position open, but $400. That is, the profit will be twice as much. That is, averaging allows us to earn twice as much if we are out of the drawdown. Thus, the averaging strategy allows us to earn twice as much. However, the risk is also twice as great if the price goes even lower. Therefore, it should be taken into account and put into your risk management. The disadvantage of using the averaging strategy in manual mode is that you can hardly measure the distance perfectly accurately. More precisely, you will be able to measure it, but you may not be able to place a trade in time. Yes, you can use pending orders, but you will not always place them in time. Sometimes you may forget, oversleep, and so on. Averaging strategy works well only when the distance between orders is accurately verified. My program or trading robot can help by allowing you to set the distance between orders in advance and automatically place them even when you are sleeping or distracted from the market. In order for it to always work properly, I recommend you to always use a VPS service, which is a 24/7 service designed specifically for trading MetaTrader, and its servers are located as close as possible to the broker's servers, which means that the execution of orders is as fast as possible. I have the official link to such a service in the description of the video. Go and use it. Now, let's see how my robot works in the averaging mode on the real market. So now let's look at the reverse example. At the beginning, I was buying the eurodollar. Now I will sell it. See, I'm in a downtrend. I expect it to go further, and I'm making a sell trade. I'm going to use the strategy tester to do this. By the way, how to use the strategy tester, I have a separate video. Be sure to watch it. I will show you a little bit here as well. So I open a sell trade, market order. What we see is that the robot immediately fired a take profit and also made another averaging order. Look how fast that happened. The price has already gone up in drawdown, and the robot immediately opened a pending order averaging and taking profit. The red line immediately moved higher. The price moves further, and the robot opens the averaging order again. According to the settings, I have an averaging order every 50 pips. As we can see, the take profit went even higher. The robot has calculated that if you close all orders now, or rather not now, but when the price reaches the red line to take profit, then some orders will be in drawdown with a loss, some will close with a profit, but the total will still be plus 10 points profit, because in the settings it is set that the profit was in any case 10 points. Now, the price has gone down, and it is enough for the price to reach the middle of all these open orders. I'll speed things up a little bit. The price goes further, the robot is still placing averaging orders. As we can see, we have formed a whole grid of orders. Robots with such a strategy are sometimes called netters. However, my robot is a little bit more complicated than a regular grid robot. It has a lot of different settings that allow to reduce risks and increase profitability. So, we see that the price went down into correction, and it is enough for us, as I have already said, that the price reaches about half. That is about this level. You see where the red take profit line is. As soon as the price reaches this middle, the robot will close all the trades and close them in total plus, and we are only considering the sell direction. The robot allows you to simultaneously include the direction to buy. Thus, while the price was going up in the buy mode, it would meanwhile collect the profit, which is obtained as a result of price growth. Naturally, this increases the profitability and reduces the rhythm, because in case of a drawdown in the sell mode, it simultaneously earns in the buy mode. As we can see, the robot withstood a rather large drawdown wave. So, the robot has closed all the trades. You see these red lines here? These are just all the trades that closed. Some of them in plus, some of them in minus. But in total, if you look at the information window, we had 5,000 on the balance. Now it is $50 or $40. That is, he closed all the trades. Some were in the plus, others in the minus, but in total in the plus $40, and immediately opened a new position. As you can see, he immediately starts to open a new position and immediately makes more money on the downtrend. So the robot withstood a rather large drawdown of the uptrend and came out in the plus. See how the averaging strategy works on my robot. If you want to trade or test my robot, write to me at the link in the description. I will provide it for free. By the way, don't ever buy any robots on the internet if you don't have the opportunity to test them. Well, now you know what averaging is, how to use it to increase your efficiency in the market. If the video was useful, give me a like, subscribe to the channel, put a bell, and also subscribe to my Telegram channel. There I publish rare news where you can make money. I wish you all a successful trading. Trade with pleasure. Bye bye.